Bang! Hello, folks, and welcome back to another edition of the Daily Crypto Byte. And today is a pretty historic day for crypto, and you need to look no further than Doc's name today to see why. Bitcoin ETF officially live, ticker BITO. It is trading, historic day for crypto. It's come a long way. The first, publicly traded ETF. Jon, I'm excited to hear your take on it. Because it's not a true ETF in the sense that it's a futures ETF, but I know there's been lots of buzz around it. You've been talking with some of your friends on Wall Street, seeing what they think about it. So I'm curious to get their thoughts. But before we dive into all that, Doc, CJ, how you gentlemen doing today?
Doing well. I threw out a bunch of I threw out a bunch of bad coffee, guys. I got some beans that weren't quite roasted all the way, and they were terrible. Oh my God. It was the worst thing ever. Just sour and bad. But now I'm better. I've got a good cup of Pete's Big Bang coffee right now.
That's good. I wouldn't like to see Jon when he's angry. You wouldn't like him when he's angry.
No, especially over coffee. My God. But there is a bunch of news. And Monty hit on it, of course, which is that, BITO is out there. It's in the wild. It is an ETF on the futures that trade at the CME. And to give you guys an idea, and those futures, by the way, at the CME settle into cash. They do not settle into Bitcoin. So that's somewhat problematic already. People who have traded those. Additionally, this is, according to the filing by ProShares, an actively managed role, because just very quickly, ABCs of this, the futures trade at the CME. The ETF is created by buying those futures. So they get demand from you guys to buy this ETF. With each purchase of that, they need to own more futures. Obviously, when people are shorting it, that's a different subject we can hit on another day. But when they're buying this ETF, they're forcing ProShares to go out and buy those futures. So far, so good. And it should track pretty well until it comes time when that future that they've purchased is expiring, because futures do. As you know, futures trade on a cycle, and every 3 months a new future comes up and becomes the front month, or the dominant future. So they need to roll from an expiring future to the next one. According to their prospectus, they're going to do this in an actively managed way. And actively managed means they don't tell you, well, on the 17th day before the thing expires, we're going to roll. They don't want to do that because they don't want us, professional traders, to see that, because what's going to happen at that time? They're going to hammer the front month because they need to sell those, right? Because those are, they're not going to carry two futures. They're not going to carry the November future, for instance, and the next further out future. They're going to have to sell the one to buy the other. Otherwise, they don't have enough money, right? I mean, if you had, pick a number. Right now, it is traded 8.8 million shares so far today, which is huge volume in the first 30 minutes. 8.8 million shares times $41. So let's do 8.8. So 8.8 million times 41. So we're basically $360 million worth of Bitcoin so far. That's not huge, obviously, because we see billions of dollars of Bitcoin traded on a daily basis. Of the 2.5 trillion in total market cap, I think the dominance, Monty, was around 45, 46% yesterday. Mm-hmm. So gives you guys an idea of, the size of this. So I'm not worried about that. But when they start rolling this thing, and that's when they're going to have to earn these expense ratio, this 90 basis points, nearly a 1% fee. Sorry, 1% fee. They're going to have to try to earn that. And I can tell you the people I've just talked to before the show started are going to feast on that roll. They are going to feast, which means that there'll be a lot of slippage for people that are depending on this to be their access to the market. And let's not kid ourselves. The only reason you really need a Bitcoin ETF is because people are lazy. People want to trade it in their stock account. People don't want to understand wallets and things like that. Why would you pay somebody a percent to manage your Bitcoin holding and then have all of the extra put in every, you take all these rolls that are going to go on for however many years you're going to own the Bitcoin. Every one of those rolls costs you money. Every one of those rolls of that from one future to another, it costs you money. So if you just spent, 20 minutes with CJ and Monty and they showed you how to open a Bitcoin wallet and how to not necessarily trade it, they can show you that. But even if you just want to hold it, they can show you how to do that, how to take it offline, put it in cold storage, put it on a Tracer or whatever, all that kind of stuff, a Ledger X. They can show you how to do that. But if you want to give up 1% to BITO and lose all that money on the rolls, have at it. This is going to be great for the people that trade against it. And yeah, it gives people access that didn't prior have access. But the only reason they didn't have access was they elected not to learn.
And if you don't want to talk to Monty and I and learn about a Tracer or a Ledger, you can put your money in Voyager with a professional custodial solution, and they will actually pay you interest 5.5% on that Bitcoin holding. So instead of paying somebody 1% to hold your Bitcoin, you will get paid because they'll be lending it out and borrowing it. So much more efficient solution, in my opinion.
Yeah. Wouldn't you rather be making 5 or 6%? If you own the VGX coin, they pay you an extra percent, right? So if they're posting that they'll pay you 5 and you own the VGX coin and Voyager pays you 6, seems like you're doing better than going to BITO and having them charge you a percent for the money that they manage. But again, so far 9.2 million shares tell me that people are lazy and they didn't want to learn. And so now they will learn.
Yeah, and as inefficient as this new ETF may be, for your everyday trader, the market does seem to be responding pretty well. And CJ, we were talking about how when we get these sort of big news pieces that are more geared towards, institutional traders, it tends to be a cascade of news. And, we saw it back in October of 2020, a bunch of institutions jumping on the bandwagon. It seems like we're getting a kind of similar cascade of positive news here. But in terms of price action, Bitcoin's looking as strong as ever on the back of this launch of the ETF. Anything in particular in the charts that you would like to share with the audience this morning?
Yeah, there are a couple things to go over. Notably, the weekly chart looks really nice. I mean, and one thing that I do want to cover, and this was a question asked by one of our members in chat last night, was that we look at these TD sequential sell nines as optimal take profit points in the actual trend. And so there was a few individuals who were concerned that we might pull back as a result of reaching this TD sequential sell 9 on the daily chart. But if you look at the previous one that we got just a few weeks back, it didn't have much of an effect. It was almost like a pause for the market, and then the bulls continued upward. And if we go back and look at Bitcoin's initial ascent from about 15K all the way up to 30K, this happened about 4 times in which we hit TD sequential sell 9s. So the technicals were actually giving you a sell signal, but the momentum of the trend was really too great to stop it. It's more of a pause or a continuation than a backstop as opposed to an all-out reversal. So in terms of the TD sequential sell 9, I think it becomes less significant after a point in which we've experienced extreme accumulation on behalf of the market participants. In the spring, or in the earlier ends before we created this ascent to 30K, there was a lot of indications of accumulation, just as there are now, or there were when we went down and had this supply absorption in earlier September and October. So something that I like to use that is a bit more accurate, I think, in my mind, for shorter term trades and a potential stop loss is the outer Bollinger Band fitted to the trend. If we get a strong close below that purple line, that is more optimal sign to take profits. And I like to go back to some historic examples to provide this. One clear example is when we got up above 36K, and then we had those initial closes below that outer Bollinger Band. And sure, it didn't mean that the trend was completely over, but we did ultimately lead to much lower price levels following that. And this is where we began to actually see distribution. And so I want to be more specific about the TD Cell 9s because you have to understand the context in which they're appearing. This TD sequential 9 was much different than the ones that we experienced on our initial run up from 15 to 30K, because at this point in the market cycle, we were starting to see signs of distribution, despite the fact that we were creating higher lows and higher highs. And that's where we actually got a reversal on the TD sequential 9. And, it was very close to the top of the trend, but ultimately that marked the top. But I don't think that's what we're going to see right now, currently. At the very least, I think our downside potential risk is 55K, but really nothing greater than that. Also, we've just seen such positive news. It's really overwhelmed the market in a bullish way. One thing I did want to bring up is that Coinbase has announced that they're going to be the custodian provider for Facebook's wallet, Novi. And so both of those stocks are up a little over 1% today as a result of that. But when we get this continued positive news after a period of extreme accumulation, then that's when you really get these parabolic price movements. And we're going to become very overbought, whether it be by the TD sequential indicators perspective or by some of these oscillators perspective. But it is kind of the nature of exponential trends. Last thing I want to say before passing it off to you guys has to do with Ethereum, because I see in the chat we do have some individuals saying they're waiting for a 3,200 level on Ethereum. I'm not waiting for that level. I'm comfortable buying Ethereum at these levels, especially when we come even closer to new all-time highs. I think, even if we get, say, one last shakeout or one last sell-off of Bitcoin to 55K, I don't think Ethereum goes really below 3,400 or the 20 smooth moving average. So I'm not necessarily willing to wait, especially when we've seen such supply absorption in both Bitcoin and ETH, because they do continue to burn Ethereum as well. But a lot of stuff there. I'll pass it back to you, gents.
Yeah, that's some really good stuff, CJ. Thank you for sharing that. And I want to quickly pass the question to you, Doc, that I'm seeing in the chat here from Chris. So he says, so guys, will BITO drive more volatility? I know you're talking about the sort of slippage at the end of the month and what sort of traders this will benefit. Are there any concerns with contango or what this might mean for the volatility of the crypto market?
Absolutely. It will drive volatility. Now, the biggest, and this is small potatoes, as we already said, even though it's traded now almost 10 million shares, that's great. And I'm all for ProShares having this out there. But it will exacerbate volatility in a way, because traders, they will see when, again, so you're that Monty is the, let's say the guy handling that role for ProShares. And let's say that you've got 300 or 400 million and eventually it's $1 billion and probably more than that in the not very distant future at all in that ProShares BITO. Now Monty has to roll, and he doesn't have a timeline. He does it whenever he wants. He's going to actively do it. And he's not going to do ones and twos, of course. He's going to do hundreds of futures at a time. No matter how he does it, the traders will see the front month being sold and then the next expiration being bought. They know he's doing it. So what are they doing? They're dropping their price for the front and they're raising it for the next Now, are they the only ones in the market, the pro traders? No, but they're going to look to arbitrage his role, and they should make, what is already going to be a somewhat expensive role, they should make it worse. Because again, just knowing how traders think, if I told you guys that, somebody is going to be selling $50 million worth of Bitcoin futures in the front month, the expiring front month, and buying them 3 months out, you're going to be buying up the ones 3 months out and lowering your bids on the ones that are coming in so that you're buying them cheaper and selling them higher. And you're going to do that every single month. And the bigger this gets, the more obvious it's going to get. Because again, Monty is not going to do 10 lots because he's got to roll hundreds of millions of dollars, eventually billions of dollars. So the bigger this thing gets, the more you're going to see that volatility. And again, if you were just a regular investor and you start to see me or CJ or Monty saying it looks like they're doing the roll, you should be buying the crap out of that next month futures that they're going for, and out of, if not short, the expiring future. And to the extent that regular Joes and Janes do that, they will make money. So it's not just limited to pros. Anybody can put in a bid or an offer on these futures that trade over at the CME. But I'm just telling you that when Monty needs to buy 200-300, just, as he's buying those, and he needs to do it as a spread, or he is naked. So in other words, Monty's got $500 million worth of BITO, and he needs to do that roll. And he says, I'm going to be slick, though. I'm going to sell out my front month right now, and then I'll wait because those guys are marking up the next month out, or the next expiration out on the Bitcoin futures. And then Monty will sell out his front, for instance, and they'll try to run the coins. And if they run the coins, now Monty's chasing that thing because he's naked. He doesn't have 200 million worth of coins. If he doesn't do it as a spread, he is just chasing it. And, I've been doing this for 40 years. I kind of know how traders think. And I think that this is not a very efficient way for people to be long Bitcoin. Those two guys on the screen could show you a bunch of different ways that are a lot smarter to own Bitcoin than with BITO. But is it good for the ecosystem? Sure. And is it going to get some crap in the press when people start saying, look at how much you're losing on slippage, which is what more or less traders call that roll? Yeah, it's going to get headlines. But if indeed the Grayscale Trust is able to drop into, because all they do is buy coins, right, guys? The Grayscale Trust buys Bitcoin. If they're able to turn that into an ETF, then, it's off to the races. And that's already, $38 billion that they have in there. I think they've got 3% of available Bitcoin or something like that. It's a real number in the Grayscale Trust. So that's the really big one. But this one is going to be an interesting trade to watch in the BITO.
Yeah, it absolutely will. Thanks for that, Doc. And, everyone's talking about how this is such a novel thing in the cryptocurrency space. But like you pointed out, you've seen this thing before. You've been in traditional equities. You've seen like the market psychology of a very similar thing play out in the past. So it's going to be, great to have people like you to lean on as we go forward here, because there are a lot of new things coming in crypto that aren't necessarily new in finance. They've been around for years, but just finally getting an application in crypto. So thank you for that explanation. Really appreciate it. But as we wrap up the show here, any doges of the days you guys are looking at today? I have a small one I just want to take a look at as a potential runner later in the week, but curious to hear if you guys have anything as well.
I am still a huge fan of Solana. I don't know if you guys listened to that Raoul Pal, the chairman of Real Vision, who spoke at our conference last year. He says that according to his charts, which he says are, quote, magic, and and he was saying that tongue in cheek, but he says they've been magical in terms of his investing. He says Solana 800 by April. So you guys already know I like Solana. I already did that trade last week, took most of it off. On any dips here, I'd be a buyer of Solana, SOL.
Very nice.
Yeah.
How about you, CJ?
Yeah, I agree with John too. Solana is definitely one that I've been scaling into, as well as Polkadot. I really like the 12% interest generated on Voyager. Also, there's just a lot of staking rewards in general, which lead to a positive supply and demand dynamic within that market. If there's more individuals willing to stake on assets like Ethereum, ADA, as well as Polkadot, then you don't typically need as much volume to increase price when you have so many existing members of the ecosystem just holding the cryptocurrency and locking it away. So that's one that I do have definitely some bullish outlooks for the end of Q4. But as of now, I'm really looking heavily just at BTC and ETH. I expect those to kind of lead the way in terms of capital flows. And then we talk about it so nearly every day about how we see a more broader rotation into the alts and then into the low cap assets. Last thing I do want to share before I pass it to Monty's Doge of the day just has to do with one tweet that I think is worth looking back on now that we've come so far. But only 150 days ago, China really put some FUD on the market by banning Bitcoin and mining and forcing it out. And ever since then, now the network is more decentralized than ever, and we're up 50% from that particular event. So pretty anti-fragile, as one of our favorite analysts, Willy Woo, likes to say. But very good stuff there. Just thought I wanted to share that one. But Monty, the floor is yours, my friend.
Yeah, that's a great tweet, CJ. That is some, incredible resilience. And it's funny because looking back at that, a lot of people were saying when that happened, when that China exodus was happening, everyone's like, oh, it's going to be positive in the long term. It was tough for everyone to see in that moment, but sure enough, it really was. But anyways, my Doge of the day today, I completely agree with you, CJ. I think now is a great time to be heavily weighted in Bitcoin and ETH. We keep talking about it, like you said, almost every day, that this rotation into the alts when the retail crowd comes in is imminent. Something we've seen in the past in Q4, and I expect to see it again here. So today I want to take a look at one potential Doge of the day that I think is looking good technically, and is definitely one that I think could be one of the first to see that rotation of capital after we see ETH, and that is HBAR, Hedera Hash Graph. And this is one that's been pretty interesting. We had Jordan Freed at the conference just a couple weeks ago here. And, a lot of people in our community became very bullish on HBAR, and for good reason. I mean, this thing is a very solid fundamental project. Obviously, it is one of those that saw tremendous speculation in the month of September when we had that NFT craze and that massive congestion on ETH. HBAR touts itself as a network with tremendous throughput capabilities. And it's able to handle a tremendous amount of transactions per second with incredible throughput. So it is a very solid network. And I think that, people will look to these sort of networks with strong metrics in terms of fundamentals to speculate. That's what we typically see retail traders speculate into. And I think HBAR kind of checks all those boxes in terms of retail speculation. But what we're seeing here, I think, is actually also pretty interesting in terms of a technical formation. Now, I have some levels highlighted here that have been some pretty critical levels in terms of volume profiles for HBAR. And I like what I'm seeing now in terms of we're finding support at this, second lower level here at about 35 cents. And, this wedge that's been forming here as well is somewhat encouraging, because each time we come back up and, people take profits on these strong moves, we're seeing less and less bearish volume enter the market, kind of implying that this sell pressure that we've been seeing since we topped here at 57 cents is somewhat becoming exhausted here. So this formation is clearly tightening around this, 0.35, 0.33 level here. And I think that we could potentially see a break to the upside once we shake out a few more of these sell orders, perhaps with one final move to the upside here. But overall, in terms of what I'm seeing fundamentally, what I'm seeing technically, and what we're seeing in terms of the market cycle dynamics, I think HBAR is looking, relatively good for a long bet here. So if I see a close in today's daily candle above this critical level of 0.35, I will be entering a long trade, and perhaps I'm going to be looking to scale in to a final third of my position with a break above this sort of downward sloping trend line here. I think that could mark a breakout level for H bar, so I'll be watching that closely as we continue the week here. So that's all I got, and yeah, I'll pass it back to you.
Yeah, I want to just make one point on that H bar because I really like it too. I'm glad you highlighted that little wedge pattern as well. But I mean, yeah, Jordan Fried was at our conference, but regardless, I mean, I'm still very bullish on H bar. That's one of the layer ones that I think is actually pretty undervalued in our current market environment, and is one that I hold going into the rest of Q4. And when you look at the validators on the network and the governance, you have some of the top corporations in the world that are validating this network in a decentralized manner. So if you guys haven't done any research on the validators and the governance of the Hedera network, I definitely encourage you guys to check that out because there are some major names in the corporate world here. But with that being said, I'll let you guys wrap it up.
Yes, thank you for adding that, CJ. That's a great point. Retail traders love looking at that sort of thing, and H bar really is killing it in that sense. But as always, thank you guys so much for watching. Historic day here in crypto. Happy to be here to share it with you guys. And as always, CJ and I will be in the crypto room 24/7. If you'd like to head over there and check that out, you can try it out at markrebellion.com/try crypto. You can try your first week for just $7. Also, we recently implemented a refer a friend system. So if you like what you see over in the crypto room, you can refer a friend, send them a link. You'll get $25 to your PayPal or $25 off your next Market Rebellion subscription, and they will get $25 off as well. So definitely check that out. Could potentially be worth your while. And also head over to investvoyager.com. Like we mentioned earlier, they are the sponsor of this show, and you can trade 60 plus digital assets over there with some very, very competitive interest rates. No management fees over at Voyager. In fact, they'll pay you 12% interest on assets like DOT and 10% interest on assets like USDC. And if you head over there, use code Rebel25 when you sign up for $25 free in Bitcoin.
Now in the EU too. So it is now available to our friends in France, as well as many other jurisdictions in Europe. So if you haven't had that ability to check out Voyager, definitely go over to that site because you might be available now.
Yes, that's right. I know there's some people in the EU watching this show. You guys have commented in on the past. Definitely head over to Invest Voyager and check that out. Very excited about that expansion. Congratulations to Voyager, Steve, and the team. Awesome work as always. But thank you guys so much for watching. It's been a great episode. We'll see you again tomorrow with another episode of the Daily Crypto Byte. Have a great rest of your day and take care.
Bang.